Hello everyone and welcome to my channel. So today I will be explaining what happened to me, okay, what happened with me while I was anticipating price to go bullish into the weekly previous week high, okay, so which had equal highs approximately right here, and I had my first target around there with equal highs. So what happened actually is, as you know, I tried to take a trade on Monday and it was a loss. I was anticipating price to be bullish, and as you can see we closed bearish. It was a consolidation. Then on Tuesday we opened, took liquidity from here, we tested the daily fair value gap. Then we had a consolidation on Wednesday, and I was anticipating Thursday to be bullish since we had news and we had these equal highs right here and the previous week's high. Now, going into the hourly chart, today I learned something new, okay? So every single day that I try to take a trade, I learn something new. What happened with me is I had every single rule checked except the retracement into a 50% area. So, retracement into a 50% area with a PD array. What I had right here is a sell side liquidity. So this is a sell side liquidity. What I was anticipating is that price take the sell side liquidity, then push to the high to take these equal highs, the weekly high, plus take these equal highs right here, which is also a buy side liquidity. So now everything was clear to me, but I needed a 50% retracement area into the sell side liquidity. What I learned today is that there is something called SMT divergence. I know about it, but I didn't have in my mind the idea that I can use it. So here I didn't have sweep of liquidity, and this is the opening of the new candle. So as you can see, price did not sweep liquidity, but going into GBP USD, you can clearly see that price swept liquidity. So this is the low, it swept liquidity and then consolidated to go up into these equal highs and into the daily fair value gap right here. So, and this liquidity sweep was in a 50% retracement area. So this is the 8 a.m. candle and this is the 5 p.m. candle. So as you can see, there is divergence right here, so there is more likely for Euro USD to reach higher targets, okay, because it's not willing to push lower. So this is something new that I learned, okay, so that I have to keep in my mind the SMT divergence between Euro USD and GBP USD, and I put it a note, okay. So as you can see, keep in mind SMT divergence between Euro USD and GBP USD. Now, going into the 2 a.m. opening, I wanted to see if there will be a 5-minute swing formation below the opening. And what I noticed, this is the opening, there is no swing formation below the opening, okay, and it happened with me many times, so I needed to investigate why this is happening. So what I actually saw is that when the swing formation is happening, when there is a sweep of the previous candle low. So as you can see, this is sweep of previous candle low, then expansion into the side of my daily bias. The next candle is more likely to not form a swing formation, so the opening of the candle will retrace a little bit and immediately shoot to the upside. Okay, so how did I notice this right here? So on Tuesday I was anticipating price to be bearish into the previous day high and the previous 2 days low, low and low. So I was anticipating price to take this low and to take this low. Going into the 2 a.m. session, this is the 5 minutes. You can clearly see that this is the 2 to 3 previous candle and next candle. So this is the previous candle. If I want to take the high and the low of the previous candle, this is the high of the 1 a.m. candle and this is the low of the 1 a.m. candle. As you can clearly see right here, we have also highs right there. It's a sweep of liquidity, but let's focus right here. We had a retracement into a 50% PD array. Every rule is checked. When going into the entry model, as you can see right here, this is the opening. We took the high of the previous hourly candle, then we closed below it. So this is a sweep of liquidity. Also we closed bearish. Okay, bearish, so candle bearish, going with the flow of my daily bias. In this scenario, I needed another entry model in order for me to have more opportunity going into the market. So what I did as an entry model, I need for sweep of the previous candle's high while forming the swing point at the hourly candle. I will enter immediately after the close of the candle, my stop loss above the swing, and this would be my entry, my first target right here and my second target right here. I take 70% right here and I close all of my position right here. So this is focusing on London session, because New York session can be a little bit different. Okay, so what I learned from this week is a new entry model. Okay, so why I needed a new entry model? I can have two entry models, so it's like writing a code. My rules are if else. Okay, so what I mean by this, if this swing formation doesn't happen, I will enter on a 5-minute swing formation, okay, on the next hourly candle. But if this happen, the else code will not be generated, so I will just do this entry. So I have now entry models that are in order. So what I mean by in order, going into these rules, my first entry model is this entry model on the hourly candle. If it does not show itself, else I have another entry model. While having this model, while entering on this model and while managing it, there is some rules that if not applicable, I will have a third entry model, which is the liquidity sweep of the third candle and my stop loss above the hourly swing formation. So now I think that I have everything that I need covered. Okay, I have, like, if I am talking about coding, I have a fixed variables that I need to put, which are this checklist. Okay, these are fixed variables, and this is my code, this is my entry model. Also, I have fixed variables at the end of the day or at the end of the week. So this is what I start with to frame an opportunity going into the market, and this is how I execute. Okay, why I did this Excel? It's very important for me because it keeps me away from my emotions. So logically, how I think, these rules are written by me. Okay, so how I think about it, if any of these rules are not checked, which I wrote, that means that there is something wrong with my entry, so I don't enter. These rules are put together in order for me to have the highest probability that I can have, with the highest risk to reward ratio, with the highest opportunity going into the market. I don't like yet to work on the 1 minute and the 3 minutes chart, because I don't have yet the confidence. Maybe when I become profitable, I will be looking for a lower time frame, but at the moment I am aiming for higher risk reward ratio. I'm aiming to trade on a high volatility days, and I'm aiming to take just 2 trades per week. So I think that I have everything right here ready for me in order to take an opportunity going into the market. Now, my target was this weekly fair value gap. As you can see, we took liquidity from here, we hit the fair value gap, and there was immediate rejection. So as you can see right here, we closed below the fair value gap. The second candle took liquidity but closed bearish. It did not close bullish, so I couldn't anticipate price to keep going higher. After this candle broke like this, and we have respect for this high, so now as you can see, we kept going lower. This is the 1 a.m. candle, 1 p.m. candle, so we are in the PM session. Okay, and going into the 5 minutes, if 9 to 10, 10 to 11, and 11 to 12, so eight to 9. So my New York session is from 7 till 10, but I have news on 8:30, so I needed to wait for the 8:30 to play out. What happened right here? This is the opening. This is the opening of the hourly candle. This is the sweep of liquidity. Okay, we have this high and we have this low of this hourly candle. What we did right here, we took the low of this candle and we closed above it. So there is high probability that this high would have been taken. Okay, but it did not take. What happened is we formed right here a swing formation, as you can see, above the opening of this candle. Okay, so at 9:30 we swept liquidity from the downside. Then we tried to sweep liquidity from above, but we got rejected from the opening of the candle. So why I always have my attention into the opening candle? Because the opening candle is like the mid-range of buyers and sellers. If I wanna be bearish, sellers will sell above the opening candle, and if I wanna be bullish, I want to buy below the opening candle. So this is like a midpoint. Right here we are in a premium, right here we are in a discount. So closed right here, opened immediately, took the high, so we went into a premium, then we pushed lower, some consolidation going into the 12 to 1 p.m., then we broke lower. Okay, so why I'm doing this analysis? I'm doing this analysis to have more confluence. Okay, so more confluence, more experience going into the market, I can expect some type of things to happen. So for example, this is a rule in my trade. So if the candle that is forming the swing point does not break the high of the low, then we enter of the sweep of the third candle and as stop loss above the swing point. So what I mean by this, we took liquidity from the previous candle but we closed above this low. So what I'm anticipating price to do, to sweep the opening of the previous candle, and after a sweep, immediate rejection to the downside. So what could I have? I could have had my entry right here, as you can clearly see, my stop loss above the swing, and I would have targeted my first swing low. So we have equal lows right here. This would have been my target for the day going into the New York session. As you can see, we are pushing lower. If we close at 4 p.m. without hitting our TP, I will be immediately closing my position. Okay, so as you can see, there is things that happens, and if you analyze it, you can have more confluence going into the market. I'm not yet confident in going below the 5 minutes chart, okay, because I'm working on swing formations. Okay, so there is a lot of people who follow ICT. They wait for shift in market structure and retracement into a fair value gap. For example, right here we shifted the market structure, we retraced into a fair value gap, so this would have been their entry and this would have been their stop loss. But I have other things that I learned from students that learned from ICT, for example, which is the opening of the candle. The opening of the candle is used as an even price. If we are above it and we are bearish, so we are in a premium, and if we are below it, we are in a discount. So right here we are in a discount. So if sellers wanna enter the market, they need to go above the opening price. Okay, so the second candle has an opening price right here, and as you can see, we went above it. We swept the previous high because we took liquidity from low. We swept the previous opening and we kept pushing to the downside. So here, this is sellers selling at a premium. Okay, so the opening of the hourly candle I treated as a premium or discount. Okay, I need a Judas swing, then push. Judas swing right here, immediate push. They don't let anyone enter. Okay, they wanna immediately push the price. This is how they work. As what happened right here. As what happened right here. This is the opening, 12 a.m. retest, immediate push. This is the 1 to 2 candle at 2 a.m. low, immediate push to the upside. So this is how you know that people are here buying in a discount with a high amount, okay, with high liquidity. Why? Because the price is immediately pushing to the upside. Right here also you can see push immediately rejected. Right here push immediately rejected. So 5 minutes interval immediately rejected, okay, even on the hourly. So it's very important to, even if you don't take trades, it's very important to analyze what's happening and to have a confluence. So I know that this video is very long, but I wanted to recap everything for the week. And as you know, I don't trade on Fridays, so tomorrow there is no trade. I'm finished for the week, and I'm down 2% now on my demo account, not my challenge account. I didn't take any trade yet on my challenge account because I'm working on my checklist. I think that my checklist is okay, sweep of the third candle, open. Okay, so I'm working on my analysis too. Okay, we have different type of analysis to have a daily bias. I'm trying to focus a lot on this because this entry model I think is what I like. It has a lot of high risk to reward ratio, nothing less than 1 to 3 risk reward ratio, and because I'm taking 2 trades per week, it's efficient. Okay, so I'm not taking everyday trades and telling you that I wanna aim for 1 to 3 or 1 to 4 risk reward ratio. When I have the opportunity, when I have my fixed variables checked, I will be trying to enter the trade. I will be focusing on the London session because I want to position myself going into the trade before the movement happens. Okay, so this is everything for today. Please, if you see this video and think that's beneficial, please don't forget to like and subscribe, and see you in the next one.